All right, welcome back to the Cow Guy Close. I'm Scott the Cow Guy. It's the black and white check. It usually gives that away. All right. If it's all about jobs and inflation, we know that the recent jobs number was hot and inflation looks to be rising, but expectations for the next read on CPI could be as much as 7.3% from last month's 7%. Now, while we're watching crude oil again, or gain, could we see a scenario where we have oil rising at the same time the Fed is raising interest rates? Or might we see a picture where the Fed is successful in taming inflation, but at the expense of jobs, right? A 4.5% inflation rate, but 4.5% unemployment rate. Boy, oh boy, what would you do with that? Here to help us all out with that is Rebecca Walser from Walser Wealth Management. Thank you for joining the show. Rebecca, these are the two things I lay awake thinking about is, I mean, you can argue that the jobs numbers make the economy look like it's doing fantastically well. I just say it's fragile. On the surface, it looks okay, but I do think that we could be easily knocked off course. And then trying to surgically remove inflation with higher interest rates could be that impetus that knocks us off course. But say we don't get knocked off course, the next thing I would think about is that, hey, you could see us tame inflation, but at the expense of jobs, right? Because you can't tell me that raising interest rates is going to be great for the economy, right? So what is it going to be? I mean, where do they go from here? So is it scenario number one, do we have a great economy and it's not going to be that big of a deal to raise rates, or do we have something to worry about?
So I think that you and I have sort of made clear over the last couple of weeks that I don't think we have a great economy. I think the fundamentals are very severely lacking, in my opinion. I could point to any one of a number of 100 scenarios. Unfortunately, I don't understand, and I know you just did the whole hit with Dan on the BLS numbers that came out on Friday. We have never seen such a disparity between the ADP payroll numbers and, being—
That's so true.
I've never seen it. And all 79 analysts were wrong. So something is a little bit off there, Scott. We know that they did seasonal variations for January that they've never done to that large extent before. And they've reset a lot of the numbers from all the way from December through June to get this somehow positive number. I don't think that we added 467,000 jobs last month. I think that it's a lot of funny business. And I don't like to see that with BLS. The Bureau of Labor Statistics should never be politicized in any way for any president ever. The American people need to be able to trust those numbers. And that's just the fact.
Well, I mean, if the CAA is politicized, I mean, what's wrong with the BLS being politicized too? I mean, that's just the way that's the world we live in today. So, and that's my worry here, Rebecca, is because I could see them. I mean, look, I just don't understand. And when I don't understand, it means my common sense, my gut instinct is having a hard time with this fact that it's going to be okay to raise interest rates to try to get this inflation under control. But don't worry about the economy. It's fine. It's perfect. Everything's going to be rosy. And I just don't feel like that's going to be the case. I just don't see a way to take the inflation problem out of it, like surgically remove it and let everything run hot. I don't get it.
No, we backed ourselves into a corner, and that's the bottom line. And let's take oil, for example, just for what we were going to talk about oil. So you see right now oil is at 91.07 per barrel, and that's a little bit down. It was a little bit higher, but why is it down? It's down because basically this administration and Iran, they're talking about maybe lifting sanctions off of Iran, and so maybe then we can buy Iranian oil again. Because if you look at what Aramco is doing and what OPEC is doing, last week OPEC obviously decided to produce 400,000 barrels a day. And then you've got Aramco that's raising the cost on more barrels. So we've got supply chain problems. If you look at natural gas and energy, we know that BTUs since January have gone up 55%. So we have massive energy inflation increases way beyond just the 7% that we're seeing annualized year over year for just consumer price index, core CPI. And so people have this energy concern. There's just no, I guess, area, Scott, that is a bulwark of just stability right now. Everything is impacted. And if we think that this Fed or anybody in the administration is going to be able to say, we're going to be able to raise interest rates and surgically cut out this inflation, but yet not affect the economy. Listen, we have inflation because we hyperinflated our dollar by pushing so much stimulus through Corona. This is why we have the inflation. So if the inflation is coming from the surplus of money as we push too much money into the economy, as the Fed sucks it back out, then they are going to impact that same economy that they use that tool to basically create a good, stable economy through the coronavirus. And that was all well and good, but now we have to pay the piper. What it's going to cost us is what we all don't want to pay.
And just like Pavlov's dogs, we've been conditioned to that outcome. And here's another one of my issues. And I said it to Dan, the previous guest. Look, I think they're going to surprise us, and it's going to be a disappointment. They're going to surprise us because if that economy, like you and I agree, is not as hot as it is, and we do get knocked off course because of the interest rate hikes that they start with this March, you'll see that Fed, because it's so politicized, like everything else is nowadays, they'll let things run hotter and longer rather than stall the economy out. They don't want to do that. They're worried about the stock market and the economy, and they'll keep that thing as hot as it needs to be in order to not let the thing roll over a cliff. Because we already saw that what happened when they, preempted a lot of rate hikes. It was about 2 or 3 years ago, I believe. I remember seeing that thing fall out of bed, and they said, I think it was Bullard, the case for higher rates is no longer there. Well, I guess that could happen again.
Yeah, absolutely. Listen, they can pretend like they're this ivory tower group that doesn't care about the economy and that doesn't get moved by the economy. But let's be clear. I mean, Trump really went after them during his administration, calling out Jerome Powell by name and saying, what is he doing with these rate policies? And they really sort of kind of eased off and reversed course and let it play out and let it go. And now we're just at a point where we're in the corner. We cannot tolerate 7%, 7.3% year over year inflation. It is not sustainable. And so we have too much money supply, and they have to reverse course, and they have to suck some money back in.
Right.
And that will drain stuff from the economy. People should be prepared. We cannot have our cake and eat it too every day. It's just not possible, Scott. There's got to be sacrifices.
Right, and taking the money back is just not an electable position to take, and they won't do that. So anyway, all right, we're on the same page. Thank you very much for being on. Rebecca Walser from Walser Wealth. Really appreciate it. You're awesome. I really appreciate it. Okay.